It's time now for On the Radar, where we ask an investing professional what they're looking at in today's markets. We're back once again with Jeff Hull, Senior Financial Advisor at Manulife Securities, to talk, Jeff, about the credit card companies, Visa, MasterCard, and American Express. You like those stocks?
Yeah, they're interesting, especially if they can be purchased at an even better bargain from where they are today. And obviously, Visa yesterday released their earnings that were stellar, big moves forward year over year. Even payment volume was up 12% year over year, transaction volume up 16% year over year, net revenue up 19% year over year. These are amazing numbers from Visa and MasterCard. But what most people don't realize is, especially for Visa and MasterCard, they're called credit card companies, but do they really offer credit? Visa and MasterCard themselves are just payment networks globally. The bank that issues the credit card is the one that is on the hook for the actual credit portion. And that's something that most people forget about. So as an example, Paul, if you and I went for lunch today and I whipped out my Visa card to pay for lunch, that restaurant would pay somewhere around 1.5% for the privilege of myself being able to use the network for Visa and have the transaction move smooth. But most people assume that Visa and MasterCard get that 1.5%. They actually don't. The bank that issued the credit card usually gets about 85%. Therefore, the lion's share of the money. Visa and MasterCard may only make 15% of the 1.5%, but they make it all day long with millions and millions of transactions. But then again, if $1 billion worth of people in Canada this year didn't pay their credit card, it doesn't matter to Visa or MasterCard because they don't offer the credit. The banks that issued the card, like Royal Bank or TD Bank or BMO, those are the ones that are on the hook for most of the credit, as an example.
Sorry, I think you were going to talk about Amex, and that was my question as well, because it actually is a financial institution. It actually does lend, doesn't it?
That's correct. Yeah. So Amex is different because they actually fund themselves. So they actually are the credit side and have their network, but they actually offer the banking side as well. So they actually are on the hook for lending. So it's a double-edged sword. They could do really well in good times, but when bad times come and people are delinquent and can't pay their cards, Amex would take that hit directly. So it's a little bit of a challenge that way. Warren Buffett is a big owner of Amex and has been for many years, as an example. But all three of these companies are interesting. If they can be bought at a good discount, they become more and more attractive.
All of that as you've been speaking, we've been showing 1 and now a 3-year stock history. In this case of American Express, they're all well off their peaks. So, before these markets turned sour in November, the stocks, certainly of Visa and MasterCard, were almost straight lines from bottom left up to top right-hand corner of the graph. That shape has changed now. What is the market concerned about? A recession and a pullback in spending?
Partially, but a lot of people, again, like I mentioned earlier with Visa and MasterCard, they assume that Visa and MasterCard are on the hook if people start to go delinquent on their payments, but that's just not the case. The other thing that's actually good about Visa, MasterCard, and American Express is they actually invest alongside inflation. So again, the example earlier of you and I going for lunch, I pay for lunch. If that restaurant is 20% more expensive because of the cost of goods, the actual bill, therefore, is 20% higher, and Visa, MasterCard, and Amex make their fee off that higher price due to inflation. So they're not a victim of inflation, they're a victor and can actually take advantage of it along the way.
Is it correct that Amex recently significantly bumped up the annual fee that some cardholders pay, and nobody objected very much?
Yeah, it was about $550 in the US, jumped to $695. Nobody blinked. Because again, it's a tool for business, and for some people it's a tool for other things. It's a small price to pay, and they have that flexibility to do that. And there's a lot of companies out there, whether Costco wants to raise their memberships, etc. Something that's a small raise may not seem big to the public, but when you have millions upon millions of customers around the world, a little price bump like that can actually bring another source of revenue into that company, just like Amex did.
Of the three, do you have a favorite?
Not really. They each have different attributes. For instance, globally, MasterCard is more of a travel card. So when things are doing really well and people are traveling, MasterCard would be a good leaning. In tougher times, if people were going to continue to hold, Visa may be better because it's a little more recession-proof. It doesn't have as much travel associated to it. It has a lot of the bank Interact cards and things that Visa does on their network and the banking system beyond just the credit side of it as well. But each has their own little attributes. But it's kind of funny. Coke and Pepsi are Visa and MasterCard are kind of like Coke and Pepsi, the two giants out there. And I always think of American Express kind of like Dr. Pepper. And then you got Discover Card back in fourth place. I don't think in my lifetime I've ever seen a Discover Card. I don't know about you, Paul, but they're all great companies, but you got to buy them at the right time. But always look for good bargains and be patient. That's the key.
Okay, great.